let's today on the MF Corner discuss service sector, which is indeed the largest component of GDP and clearly its biggest driver as well. But can services sector funds power your portfolio too? Dhirendra Kumar from Value Research is here to answer just that. Dhirendra, services sector funds have outcome or have outshone, I should say, the Sensex in a 3-year time frame and over the last 1-year period as well. What, according to you, has been the driver of their performance?
Primarily, manufacturing sector or the service sector. And if we look at these funds, they are not, they are not broad-based service sector funds. They are primarily, technology and financial services funds, so to say. Looking at the portfolio, the underlying portfolio. And from that standpoint, banking funds have done well, and so has technology of late, and that has actually boosted the performance of these funds. But of late, but on a full market cycle, these are not very impressive funds. Also, when I look at it from the point of view of an investor, that how he should look at these funds when he's seeking, investing with simplicity and gaining diversity, these funds don't fit the bill. They don't really, they don't have a very well articulated role in one's portfolio, whatever be their portfolio dynamics.
So would you recommend these funds to investors, and also what should existing investors who are locked in these funds do?
Yes, I don't think even sector funds have a role to play. You find that your portfolio is low on FMCG or your portfolio is low on pharma. You try and emphasize it. Not these funds. It's very difficult to have a defined role for these funds, so investors should keep away. And investors should also not get carried by near-term good performance, because on a full market cycle these funds do poorly.
Our first query, Dhirendra, today is coming from Dilip Shahi, and he wants to know if it's worth to opt for open-ended ELSS tax saver mutual funds for FY13, and he wants to know what's a better option for tax planning from FY14 onwards.
This year's budget has actually given a surprise that DTC is not coming into force. So even for next year, he should one can well consider the open-end tax saving fund. And this year, by all means, if you invest till March 31st in an open-end tax saving fund, you will be entitled for the ATC benefit. And even the gains on these funds will be tax-free, because even if DTC comes into force, because even in DTC, the gains from equity and equity fund remains tax-free.